Hey there guys, welcome back to another video. In this video we're going to be looking at Accounting Standard 3.1, which is just looking at demonstrating and understanding of accounting concepts. This exam is pretty straightforward. It's probably one of the easier externals you can do at level 3. In this video we're just going to go through the exam and just some kind of tips and tricks for answering and helping you out in this standard. Okay guys, so coming on to the start of the report here, we're going to be looking at a company called Tourism Holding Limited, and we're going to be looking at their annual report for the end of the year, 30th of June 2023. So a bit about the business. It's going to be from Aotearoa, New Zealand. It's a tourism company. It's going to manufacture, rent, and sell some RVs, so some camper vans, some motorhomes, and caravans to tourists who are coming here to check out the country, or from the country as well. And it's also involved in other tourist activities, such as the Waitomo Caves and black water rafting. And we can refer to it as just its abbreviated form, THL. So guys, quite a lot of this assessment is just kind of a little bit intuitive for some people, especially if you've done accounting before. So just kind of reinterpreting what the question's asking and almost just kind of spitting it back to your examiner. So looking here at our first question, the following is an extract from the Our People and Responsibility section of the annual report. So we're going to thrive, supporting our crew, creating a healthy culture and building cultural capability. The goals are for employee health, having a living wage, which is a bit higher than what they would be paying them at minimum wage, fair employment terms, employee discrimination, and employee concerns. All right, so if there's an employee discriminated against, or if there's some concerns, they can come to the business. So 1A is just asking us, with reference to the goals identified, explain why this information would be of interest to a potential employee of Tourism Holdings Limited. So if you're an employee, obviously, guys, you want to work at, you want a few things. You want to be fulfilled in your job, you want to make some money, and you also want to have like fair and just working conditions. So the fact that they have, they're paying living wage, which is quite higher than a lot of other employers are paying, and that they're looking after the employee health, and they're looking out to see if there's any discrimination or concerns, makes it quite an appealable place to work for some employees. So in terms of putting that into words, guys, we'll just come in here, make a text box. So we'll start off by just talking about how THL is creating a work environment that kind of prioritizes looking after its employees. So we'll say THL shows its commitment to creating a work environment that prioritizes the mental and physical health. Prioritizes the mental and physical health of its employees. Bad spelling there, sorry guys. So they're kind of looking after their employees quite well. So this would if an employee saw this, they'd be quite happy, guys, like we kind of said, that the employer is valuing their well-being. So this information would help to reassure any potential employee that their employer, THL, values their well-being, just like that. So that's kind of what they'd be after, just kind of giving us the kind of brief opening statement here. What would kind of want to go on from here would be talking about the living wage and just a few other things in the question here. So what we could start off by saying is the fact that THL pays its employees living wage as opposed to minimum wage. Highlights that it equitably compensates its employees. It's looking after their employees, right? Again, if a potential employee is looking at this, that's going to be good news for them, and it's going to make them more interested in working in the company. So similar to that last 2 sentences ago, we're just going to say that again. This information would help a potential employee to assess if the job lined up with their financial goals. Right. Just one or two more things I want to take away from this section in here. The first would be around the employee discrimination, how they're looking for kind of diversity and equity and inclusion. And it kind of just assures any potential employees, especially some who may be from minority groups, that they'll be treated fairly regardless of their background. So we'll go ahead and we'll put it in here. We'll say addressing employee discrimination indicates THL's commitment to diversity, equity, and inclusion. This assures any potential employees that if they were to work for the company, they would be included and looked after. Alright, so that's kind of what they're looking for that section in there, guys, for that 1A section. Pretty straightforward. So just kind of read the question quite carefully, and a lot of the time they just kind of want you to regurgitate a lot of the stuff that they've said just back to you, just with a little bit of thinking on top of it. So that's kind of that first section there done. We'll go on to 1B now. So explain why a potential employee would be interested in the consolidated statement of cash flows in your financial statements section of the annual report. So remembering, guys, our consolidated statement of cash flows is just looking at all our cash expenses. So it's very similar to the income statement, just excluding stuff like depreciation, and instead of looking at stuff like the gain of sale or the loss of sale on an asset, you're just recording the actual amount that you sold the asset for. It's kind of the simplified version. So what they want us to do is they want to say the purpose of the statement of consolidated cash flows, and then specific information in that statement that would be of interest to a particular employee. So an employee if they're going to maybe move towns or cities, they want to make sure that the business is in a good financial position so that they can continue working there for the duration of their contract or their job. So what we're going to say is we're going to say that in there. So we're going to say a potential employee of THL would be interested in the statement of cash flows because it would show them how the company THL is performing in terms of cash management. We'll just list off a few accounting terms here: liquidity and financial health. Right, so kind of like what I was saying before, they can just see if the company's going to stick around or if it's on its last legs. That's kind of the simplified version. So talking about the consolidated statement of cash flows, the consolidated statement of cash flows for THL is to summarize the company's cash inflows and outflows. during a specific time period, normally the financial year. Yeah, so that's kind of what they're looking for that section there. Now, guys, in a question like this, they could kind of ask you about any of the different financial statements for a company, but the truth is it's kind of similar for almost all statements. Whether it's your balance sheet, your statement of financial position, or your income statement or profit and loss statement, they're all kind of the same idea. Just giving the potential employee a better idea of the company. So then in terms of talking about that a little bit more, guys, what we could say is a potential employee could assess whether THL has enough cash on hand to meet its payment obligations promptly. Right, so making sure that they can pay their employers. So a strong positive cash flow from operating expenses. Operating activities. I would indicate a healthy financial position. This would indicate to an employee that they would be paid on time and that the company will survive. So just kind of expanding on that a little bit more, guys, what we might say is just one more sentence, just kind of really drilling it in. We could say, if there's a history of consistent positive cash flow and large cash reserves, a potential employee may be more willing to work for THL as they see it as a safer option. Alrighty, we'll just come down onto this next line here. Just a little bit more on this question, guys. We'll just kind of wrap that up. So we'll just say something about the fact that they understand the statement of cash flow could help a potential employee kind of make an informed decision. One of those buzzwords that NCA really likes to hear, informed decision about whether or not to work for the company. So we'll say that in here. So understanding THL's cash flow could help a potential employee make an informed decision about whether to work for the company or not. We'll just say one final sentence wrapping it up. So a strong and stable cash flow could provide confidence in the relationship of the employee and employer relationship. Alrighty. So that's kind of what they're looking for that section there, guys. Just kind of, again, saying those buzzwords that NCA likes to hear, and kind of remembering, although we're talking about we're talking about the statement of cash flows in this question, we can kind of interchange that for most words, most financial words, like financial statements, whether it be, income statement or your statement of financial position, because it's kind of the same idea, just looking at the financial health of the company and just making sure that that's something that the potential employee wants to work at. We'll come down here to the last part of question 1, which is looking at the independent auditor's report. So remembering, guys, an auditor is just going to go through and put simply just kind of check over your accounts and make sure that everything's okay. So if just reading through this here, in our opinion, this is what the auditors said. In our opinion, the accompanying consolidated financial statements of Tourism Holdings Limited, which is THL, including its subsidiaries, present fairly in all material respects the financial position of the group as at 30th of June 2023, its financial performance and its cash flows for the year ended in accordance with the New Zealand equivalent to International Financial Reporting Standards, the NZIFRS, and International Financial Reporting Standards. So that's a bit of a wordy question, but essentially what they're saying is, yep, there's no errors in your financial statements. They're true. They're not saying if the financial statements are strong or weak or just okay. They're just saying, yep, all the numbers are correct, honest, and fairly represented according to the NZIFRS, which is kind of just like the rules. So what they want us to do is explain why a potential shareholder, so that's someone who'd be looking to put money into the company for some equity, would be interested in this statement from the auditors, including in your answer reference to the qualitative characteristics of faithful representation and comparability, and then also how this statement enables a shareholder to make decisions based on the financial statements with confidence. So essentially, it just means that a potential shareholder can look at the numbers and say, yep, these numbers are correct, they're true, there's nothing kind of fraudulent going on here, and I can make my own assessments based on those numbers, and I don't have to, worry about them being wrong. In terms of putting that into words, guys, we'll start off by saying that the auditor's statement's showing that it's all represented fairly. So we'll say the auditor's statement shows that the financial statements present fairly in all material respects the financial position, performance, and cash flows of THL. Right, kind of like what I was just saying before. So this ensures that a shareholder can rely on the information provided when making an informed decision. Another, again, getting those buzzwords in, informed decision around investing, around potentially into THL. So the fact that they are accurate reports kind of means that it's easier for a shareholder to kind of look at any trends that might be forming. Revenue's kind of been increasing over time, decreasing over time, the same idea. So in terms of putting that into words, we'll kind of say that again. So when THL presents complete, neutral, and error-free reports, makes it easier for potential shareholders, to compare and contrast any trends over the past few financial years when making a decision on whether or not to invest. Right, so kind of like what I was just saying here. Informed decision with confidence. So one little thing we'll just chuck on the end here, guys, is just around we don't actually need to, but we could talk about the NZIFRS. So even if you're aiming for an E8, you still don't actually need to mention the NZIFRS, the accounting system, but you could say in financial position, performance, cash flows of THL in compliance with NZ IFRS standards. So just like that. So that's kind of question 1 done. Now guys, what we will do now is we will go on to question 2. Okay guys, so coming on to question 2 here, we're looking at answering questions A and B. So the first question is for the business Tourism Holdings Limited. They paid an audit fee of 1.125 million to PricewaterhouseCoopers PwC New Zealand, which is an accounting firm. So explain why audit fees are reported as revenue expenditure in the financial statements of Tourism Holdings Limited. So guys, remembering audit fees would be paid kind of probably annually, because you probably get your accounts audited once a year. And they're going to be kind of just double checking through all of your books, making sure that everything's in order and that you've faithfully represented all your material. Yeah. So in terms of writing out a question here, guys, what we're going to want to say is their revenue expenditure, because they're probably going to be paid every year, or most likely they'll be auditing every year. You can assume that they're being audited every year because they're kind of a recurring thing that needs to happen every so often, and therefore the economic benefit from that revenue expenditure is going to be limited to the current accounting period. Okay, so it's going to be reported as an expense for your income statement or your profit and loss statement. So in terms of putting that to words, guys, we're going to say the audit fees of 1.125 million to PwC New Zealand, a revenue expenditure for auditing services provided, right? So just kind of spinning back that question back to them, just as kind of a starting few words. So like I've said, guys, you're going to be getting audited every year, so it's going to be annual. They're kind of like a recurring thing that happens every year for large companies. So therefore, again, economic benefit is going to be for that year that they're paid for, okay? So it's going to be shareholders looking at whether or not they want to invest for that year. So all the benefit coming from that expense is going to be for that year. So that's why it's going to be in the income statement, right? So in terms of putting that to words, guys, what we're going to say is as audit fees are likely to be paid every year, they are recurring nature. So they're happening again and again and again. And therefore, the economic benefit is limited to the current financial year or accounting period. Only. Therefore, it will be recorded as an expense. And THL, that's Tourism Holdings Limited, just abbreviated name, remembering, guys, income statement. So that's kind of what they're looking for, just for that kind of first question there. Reasonably straightforward. Yeah, just remembering, guys, reading through the question, kind of almost just regurgitating back to them and just kind of putting a little bit of input in there about what they actually want to hear. So coming over here, guys, to question B. What they want to hear is about tax. So justify how and why, I'll just move this down a little bit. Justify how and why the income tax expense of 17 million. So a tax expense is going to be on our comprehensive statement of income. It's going to be what's going to get paid at the end of the year. It's treated differently to the current tax payable of 13 million. So the current tax payable, guys, is going to be a liability in our statement of financial position, and it's kind of money owing. to the IRD, right? That's probably going to be paid. That's going to be paid in the next year, the next accounting period, right? And the income tax expense is for the previous year, and that's going to be on the income statement. Okay, so in terms of putting that into words, guys, we're going to say the income tax expense of 17 million is reported in THL's income statement as an expense because this is the tax on the current year's profit available to shareholders. Yeah, in terms of getting those buzzwords in, guys, we're going to talk about why this is relevant. So this would be relevant. Actually, we might leave the relevance in the faithful representation after we've kind of explained these two base concepts. So that's kind of the first part done there, guys. Coming on to the next part, which is on the tax payable for 13 million. We're going to say tax payable for 13 million is reported as a current liability in the statement of financial position, as it is part of, remembering, guys, like I said, it's part of the following year's income tax expense, so it's not yet paid to the IRD, it's just an amount of money that needs to be paid. So it is part of the income tax expense, not yet paid to the IRD. The amount of tax expense, we'll just end it there actually, IRD. For the next accounting period. Next financial year, we'll say, or accounting period. So that's kind of just covering off the two, why income tax is an expense and why taxation is a liability. So if we had just done these two things here and we'd done a good job here, that's already an E8. There is one little bit more that we can add to this, which would be just talking about, again, some of those buzzwords that NCA loves to hear, which is going to be the relevance and faithful representation. Okay, so in terms of faithful representation, we can start off with that. This is we'll just go faithful representation. So the IRD is going to determine the amount of income tax that needs to be paid on the current year's profit. The rules from that, that's going to align. So accountants will determine from IRD tax rules the amount of income tax that needs to be paid on current year profits. And then in terms of the other buzzwords, which we're going to talk about, is going to be relevance. A little bit easier to do this one. It's going to be relevant because we'll say tax payable of 13 million is relevant as it's the amount, it is the amount of tax required to be paid so far for next year, which will impact THL's profitability, as well as 17 million tax expense from this year, likewise affecting profitability. Alrighty guys, so that's kind of what they're looking for that there. That's more than an E8. So out of these 5 kind of areas, we've talked about why it's a liability, why it's an expense, faithful representation, relevance, those 4, as well as this up here. That's kind of 5 things. You need 3 to get an E8 or 2 to get an E7. So this is quite a straightforward, simple question. Definitely easy to pick up some marks on. We'll move on to question 3 now. Okay guys, so coming on to question 3 here, they've got a bit of an extract that they want us to read. Then we'll get on into the question. So, use the information contained in the following property, plant and equipment note extract for THL to answer this question. So looking at the question here, guys, looking at the information here, we know that property, plant and equipment is made up of the following assets. So motorhomes, which comprises of a rental fleet of the rentals business. So they'll own some motorhomes that they're going to be renting out to people, as well as motorhomes that are held for sale. Okay, so motorhomes that are held for sale are reclassified from property, plant and equipment to inventory. Okay. We've also got some motor vehicles, some land and buildings, some other plant and equipment, as well as a capital work in progress, which is going to be capital purchases and projects that are not yet in service. The most significant work in progress relates to the motorhome fleet built for the next season. Alrighty, that sounds pretty good. So land and buildings are not shown at historical costs. Are shown at historical costs. Less subsequent accumulated depreciation for buildings. Land is not depreciated. Can't depreciate land. All other property, plant, and equipment are stated at historical cost. Less accumulated depreciation. Historical cost includes expenditure that is directly attributable to the acquisition of the items. Alrighty, guys. Well, that sounds of the item. Sorry, and there's one little bit there. Subsequent costs are included in the asset's carrying amount or recognized as a separate asset as appropriate, only when it is profitable, that the future economic benefit associated with the item will flow to the group and the cost of the item can be measured reliably. All other repairs and maintenance are charged to the income statement during the period in which they are incurred. So a pretty wordy question there. Pretty wordy information. Getting to the question, they want us to justify why items of property, plant, and equipment are reported as assets in the Statement of Financial Position for Tourism Holdings Limited. And they want us to explain these 3 bullet points, which is why motorhomes held for sale are classified as inventory and current assets, while rental motorhomes are classified as PPE. How historical cost is applied to the measurement of property, plant and equipment, PPE, and how the work in progress of the motorhome fleet meets the definition of an asset, and why it is an example of a capital expenditure with PPE. So a very big wordy question, and a lot of information they've given us, but what we're going to start off with, guys, is just the NZIFRS framework for what is an asset, because that's one of the most important things. And guys, it's pretty likely that this is going to pop up year after year, no matter when you're watching this, about the framework for an asset. So in the IFRS, the International Framework for Financial Reporting, there's 3 things that define an asset. So the first one of those is control. So the entity, which is in this case is going to be THL, has to have control over the resource, which kind of just means it can decide how it's used, restricting others from using it, stuff like that. There needs to be a past transaction or a past event. So the resource has to have come from a past transaction or event, right? So you could buy equipment, sign a contract, something like that. And then finally, there needs to be a future economic benefit from it. So it's going to be capable of producing inflows of cash or reducing outflows for the entity in the future. So it could be, machinery that produces a good or receivables that's going to bring in a cash. So we'll just get started off with the first bullet point here, guys, which is why motorhomes held for sale are classified as inventory and current assets, while rental motorhomes are classified as property, plant, and equipment. So the motorhomes that are going to be classified as are going to be sold are going to be looking to be turned into cash within the next year, which immediately makes them a current asset. Remembering, guys, that our current assets are assets that plan to be liquidated within the next year, turned to cash within the next year, and non-current assets are assets that don't plan to be turned to cash within the next year. So in terms of putting that into words, guys, we'll start off by saying that the motorhomes that are held for sale are classified as current assets as they are planned to be turned into cash within the next year. Whereas the rental motorhomes, guys, are going to be classified as a non-current asset because they're going to be holding them for longer than a year, right? They'll be used for at least several accounting periods, rented out to clients, bringing in income for THL. So whereas rental motorhomes are classified as PPE and non-current assets, as they will be used for several accounting periods and rented out to customers, bringing in income for THL. Alright, so that's kind of that first bullet point done. Okay, so coming on to bullet point 2, just looking at how historical cost is applied to the measurement of property, plant, and equipment. So essentially, guys, what we're just going to say here is the cash paid when they first bought the PPE is essentially going to be directly associated to paying for the PPE. Essentially, that's kind of what we're going to say. We're going to chuck in a few fancy words, but that's kind of the general idea of how the historical cost is applied to the measurement. So what we're going to say here, guys, is THL's PPE is recorded at the amount of cash or cash equivalents. Remembering, guys, we could pay another way. We could be kind of trading assets, stuff like that. Or cash equivalents paid in order to acquire the PPE at the time of the acquisition. You'll be careful with your wording here, guys, making sure that it's all in past tense and it's referring to the past acquisition. So this amount of cash, I'll just copy this in here, or cash equivalents, includes expenditure that was associated with acquiring the PPE. So just an example of that, guys, could be costs incurred of getting the assets into location, and ready to use, such as costs of transporting the assets and condition and getting assets and getting them into order to work. Okay, so that's kind of what they're looking for that second bullet point. We'll come on to you could write a little bit more, but even for E8 you don't really need to. Coming on to the third bullet point here, how the work in progress of the motorhome fleet meets the definition of an asset, and why it is an example of capital expenditure associated with property, plant, and equipment. So the work in progress of the motorhome is going to be an asset. We're just going to go through the three definitions of an asset, guys, that we went over before, which are going to be future economic benefit, past control over the assets, and a past transaction. Okay. We'll start off with economic benefit. So we'll say the work in progress of the motorhomes is an asset because it meets the criteria of NZIFRS. It was purchased in the past with a past transaction. That's one down, guys. We'll say THL owns these motorhomes and has decision and can make and can do as it pleases with these motorhomes, giving them control over the asset, over the item, because it's not confirmed to be an asset yet. And finally, once these motorhomes have finished being worked on, they will be able to be rented out, providing income from customers to THL and giving future economic benefit. Alrighty. Yeah, so I feel like that kind of covers off the three definitions. We've gone through all definitions, and that kind of covers off the exam walkthrough. Hope you guys enjoyed the video and found it useful. If you guys would like any other content or you have any ideas, drop a comment below. And yeah, have a good rest of your day, guys.